and welcome to session recap 19 September 2016. Previous week was one of the best and maybe the best after after some time, because usually we get like 150 pips pool, and last week we had 400 pips pool. And actually I hope that you managed to make really good pips, because session recap last week was one of the best. As I say, 400 pips pool overall. All trades were winners, most of it. And it's as I said, markets are starting to get into its business mode. They're off from holidays, and definitely we had a great week. Really, I will show results, I will show where price went. So I hope that you managed to grab at least 20-30% out of the pips pool, and I certainly enjoyed it. In the beginning, questions, Emre saying it was very good last week. Thank you, Emre. Ilya, how are you? Nenad? Yeah, I'm very fine, thank you. And I hope, guys, that you're good too. So yeah, we will, as I say, when markets are back into its business mode, then the price usually listen to us, and it should be like that. So before we begin, as always, standard disclaimer explaining that online education materials are available by Admiral Markets Estonia for a global audience. So this is my personal opinion only, not MA UK opinion. And this webinar is for informational and educational purposes only. A risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with us. And this is me, Nenad, so we can continue. Yeah, past week results, typo, this is 12th of September, so I will correct this typo. It's not 5th of September, it's actually 12th of September. And let me just give me a quick moment to correct the slide. So yeah, it should be 12th of September, yes. So 12th of September, and we had a really good week. This is it. So euro dollar positional trade was good for 120 pips. Pound dollar positional trade plus 170 pips. Australian dollar plus 50 pips. New Zealand dollar 50 pips. Dollar CAD 30 pips. And total pips pool 420. Now the trade of the week, it could have been euro dollar, it could have been pound dollar. Both trades were great. Maybe euro dollar was a little bit better because pound dollar was in a drawdown that almost hit its stop loss, but it was obvious that it will actually go down. So I couldn't decide it myself, so it's something between euro dollar and pound dollar. So yeah. Yes. Euro GBP, sorry, Egils, also left over. So yes, Euro GBP, indeed. I will correct this. So actually, this is what we had. Indeed, Euro GBP, it was good. And I hope that this week will be good too. Before I show you previous week results, I want to show you quick risk disclaimer. Especially for people who are new to this webinar, you should respect the rules, and I will tell you now what the rules are. So first rule is give price a breathing room, enter within 15 pips maximum of the predicted level if it's in agreement with your system. It's called POC or buffer zone. If you miss your entry, if you see that it's actually going your way, try to go with a lower position if you miss the entry. So this is very important. Enter within 15 pips of the predicted level if it's in agreement with your own system. Of course, all this is done by Camarilla, MACD, my own method, and the analysis that you read with other markets is also Camarilla MACD method that I have personally developed, combination of price action and MACD indicator. And 70 to 80% of principles are within price action trading school. Use scaling in if you wish. Do your own trade and money management. Always, guys, always do your own trades and money management. Respect your stop loss. Add a spread to your stop loss. Even if you trade via ECN, add at least 2 to 5 pips to your stop loss, guys. Always. I usually add something like 5 pips, sometimes 2 or 3, but usually I round it up to 5. Even if you trade with ECN, it's good to add a little bit because it doesn't, Alma Marquez has a very low spread, but still it's not about brokers, it's about the market. Because sometimes market can spike up your stop loss and then continue in your original direction. So that is why we always add a little bit to our stop loss. We take only one position per listed pair. It can be either positional or alternative trade, whichever hits first. First touch of the zone is the most profitable. That is why we need to focus on the first touch. So we trade the first entry, the first touch within the zone, because we are trading in the zone. Positional trades are trend trades. Alternative trades are counter trend trades. Breakout trades and scalp trade levels can be traded independently of any position. Depending on time and volatility, we use profit stop. After 20 pips, not less. Session recap setups are valid for today, tomorrow, and sometimes the day after tomorrow. Pay attention to my Twitter updates and know that scalp trades should be done at or very close to important support resistance levels. All those levels are calculated by historical levels and Camarilla, so you can add it up into your own system and platform. Add these levels to your system, pay attention to trend. So if you see that our POC has been missed, you can actually find other trend-based entries. And those trend-based entries can be also very good. Pips pool is the maximum available number of pips you could have got on recap entries. So these are the rules. And this is what happened during previous week. So here we actually had our trade initiated. At this point, this was the time of our webinar. It was 12 September 19 platform time. So here the trade was initiated and it was a sell position, a perfect rejection from our chart. And POC here, guys. You see now? So this is the time where we had webinar. Then the price went up, down, up, down. You see, this was not trading zone for me. This was the trading zone. This POC here. And you see, the price hit the zone and it went down, dropping towards our target. So we really got a good entry. After some time, euro dollar started to respect the price and to respect our analysis. Pound dollar was a sell of 33.20 with a stop loss of 33.45 to 50. Now if you add like 3 to 5 pips to your stop loss, it has never been hit, although it was very close because the price went up to 33.47. But if you put your stop loss at 33.50, well, you shouldn't have been stopped out. And then it hit our target, first target, second target. So that is why I said it should go down. This was clear to me that it will go down. Watch this. This was a rooftop, guys. And if you remember my analysis on other markets, I said GBP dollar rooftop pattern could tank the price, and it actually tanked the price down. So pound dollar, a great win for us. Australian dollar was ranging, but we actually had a great buy trade, as I said, and this was the time of our webinar. The price went up, then it dropped to our POC point. Our POC point and zone was at 74.30. The price dropped to 74.42, 41, and then it spiked up. So you see how the price is magnetically pulled towards POC zone. So POC zones act as price magnet. And we got into even better trade. The target was 50 pips. You see, I was very close to the target here because the price rejected and rejected another time. But if you stayed in the trade, watch how many pips you could have made, even higher target than I had given to you. But actually I didn't expect so big retracement because this was a counter trend trade opportunity. And Chinese data always move Australian dollar because Australian dollars is heavily connected to Chinese data, especially to equities. And don't forget that Australian dollar is hard commodity currency, so it's correlated to iron ore, copper, and gold. Contrary to New Zealand dollar, that is a soft commodity currency that is connected to dairy and milk products mostly. So yeah, this was obviously the final zone for a trade. And yes, Ilya, you are actually right. Ilya is saying that New Zealand dollar and Australian dollar are currencies of carry traders. Yeah, indeed. And if Fed hikes the interest rate, then we will see a 5 pip 100 drop in New Zealand and Australian dollar, Ilya is saying. It might be, but I will soon publish my own analysis about Fed, and I don't think that Fed will hike now. I will publish my opinion on Traders Blog, guys, on Wednesday. So around noon on this Wednesday, you will read my opinion about rate hike. And I don't think that they will hike. Of course, I have my own reasons why I don't think that they will hike now. But well, guys, you never know with Fed. But I will give you my reasons why I don't think that Fed will hike. This will be the single most important event this week. So guys, all these setups that I will present you later with, take it before Wednesday or early, or at least early Wednesday morning, because after New York joins the fray, the setups will not be valid because market will be waiting for Fed decision. Okay? So this was Australian dollar. New Zealand dollar, again, guys, I told you to pay attention to 73.55 for a sell. Even 73.55 to 80, I took the position here, so that is why I marked it. Actually, you could have taken it a little bit more to the upside, but as you can see on my chart, I usually place marker where I take the trade personally. So this was it, actually. Well, you could have taken it a little bit more to the upside, so you would have had even more pips. But well, it was good because after this drop, the price spiked up, and you can see that actually it was good for like 40, 50 pips depending on your entry. And Euro GBP, yes, very good setup again. Well, previous week was really, really good. Indeed, guys, very, very good. I mean, I don't think that we had a week that, well, we had actually a couple of weeks for 400 pips and more, but usually it's like 100 and 200, but it was double. So, well, sometimes the market really respects the level, and it's not easy for me to really make this beforehand, because as you know, guys, it's really a hard job to actually give you a pinpoint analysis before actually market hits the zone. So everything is like a prediction, but you need to react, always react at POC zones. So here it is, 885.00. Okay, we had a sell position that was initiated here. The price didn't hit our stop loss, so it made like 85.00 to 84, like 30 pips, let's say. Okay, so like 30 pips. This was our stop loss, so you can see it was not hit. This was around this level was our entry, and here you see the price dropped down and hit, well, it actually hit this zone that also served as a support zone, but well, I said 83.90, it didn't proceed lower, so you could have made like 30 pips on this trade. So that was it. Now let's see what we have for this week. Now I cannot give you buy position from my analysis, because today actually we had already a buy position for euro dollar. I traded this setup, and I hope that you made money with this. I will show you the analysis. It was very clear. Here, this is what analysis said. I actually scaled out around 12.00 because this was the first target, and after my analysis the price dropped a little bit more to the downside and then spiked towards H3 level. Emre is asking, should we close or wait more? I would scale out, Emre, and I would scale out and put the rest to break even. So I closed my trade, I scaled out, and I'm like riding a free ride. So yeah, of course, Ilya, if you trade with 0.20, I don't know, I wouldn't wait. I would scale out and put the rest to break even. So I don't like particularly to trade a lot before Fed, because market can do anything, you know, before Fed. There will be some profit taking, there will be some I don't know, I think that euro dollar can reject, but after it goes to POC. So yes, I will tell you, Ilya, what you can do, but I will show you now. So actually we had a long here, it hit H3. Why I said 12.00? Because we have an X cross for target. This was a trend line that has been broken. Now it can become an inner trend line, and this region, Ilya, for you also, is good for a sell trade. I agree, but only if the price stays below this zone. Because here I said targeting 12.00, 12.25. I didn't see it much above, a lot above 12.25. So that is why I'm saying maybe it's good, your position, to sell it there. Because if it proceeded more to the upside than 12.00, well, in that case, it could probably go more to the upside. And here it is. I would sell here. I cannot now trade if the price is within the trading zone. And for me now, because we already have had a buy position, I cannot say that we are in any swing POC point zone. So from short-term perspective, Ilya, 12.00, 11.90 can be good for sell trade. Yes, it's a good resistance. So it could drop the price down. But also don't forget that until 1.1115 is broken, divergence is still in play. So in order to actually have a good breakout, divergence should fail. And don't forget that 4-hour time frame is still in uptrend. I will show you that now. So only below this level, I can say that the breakout can be good for a new good trend. And here, 13.10, you see it is a sell. And this is where we saw divergence. Of course, Ilya, it's a hidden bullish divergence. Let me show you. Hidden bullish divergence is hinting to the chart continuing to go up. When the price makes a higher low, but the oscillator is making a lower low, we say that we have a hidden bullish divergence. You see, this is divergence here. Hidden bull. It's hidden divergence, so it's not a regular divergence. It's hidden divergence. And this chart is up. Is this an upper trend line? Is this ascending trend line? Is this price action bullish? Watch the whole woods, not just the tree. Low, high, higher low, then the price goes up. Higher high, then higher low, then it was a little bit lower high, but the price made a higher high again, a higher low again, a high compared to this high, and this. So the price actually is making higher lows. Higher lows are on 4-hour time frame. Higher low, higher low, higher low, higher low. Everything here is higher low. Not a perfect uptrend, of course, but it's still uptrend. Because price is, if you watch this, the price is going up. So here, hidden divergence told us that the price could spike from this zone because we have 88.6, the strongest number of all Fibonacci numbers. If you like to dispute what I'm saying, well, have in mind that no one can tell me that 61.8 is stronger than 88.6. For me, in Forex, 88.6 is the strongest. Well, at least in Forex market. And 61.8 is the strongest in the universe. But in Forex trading, for me and my analysis, you know what I teach, 88.6 is the ultimate Fibonacci level. So 88.6, then divergence, higher highs, here the price historically, guys, you need, I don't know why you don't watch the history and why does no one is telling you that you should actually watch the history. Here the history repeats itself. So if the price spiked from this level, that means that we also have had historical buyers within this zone. Are there historical buyers? Are there historical buyers? Yes. So the chances that it will spike up, giving us a good intraday trade opportunity. So here, this is why I'm saying always watch for historical buyers, for zone, and where the price might spike, bounce. This was the zone to go long. Now, Ilya, if you're short here, as I say, it's good, but pay attention until 11.15, so below this low and below L3 confluence, until 11.15 breaks below we would not have any bearish momentum, strong bearish momentum. It can go up, reject, it can go up, reject, but ultimately it should go below. So this is a bit range in an uptrend. So that is why I'm saying you can actually go short around 33.10. This is stop loss, this is target, and this is TP2. Possible breakout only if 1.1115 breaks with stop loss above H1 high targeting 1080, 1050. So that is what I see. And why 1310? Why 1310? Well, because 1310 is actually a good zone. There is a good zone around 1310. A lot of historical selling. So even maybe after the Fed announcement, guys, pay attention to my analysis, because if dollar spikes to the upside, we might see maybe a sell-off from here, especially on no rate hike. So watch for this zone. It's important zone. A lot of selling in the history. So that is why I'm saying pay attention to historical buyers and sellers. Pound dollar, possible sell at 31.45, 31.95 stop, 30.50 target, buy possible at 29.80, 29.50 stop, 30.50 target price. So 31.45 is sell position. And here, guys, you see why. This is previous low volatility zone, Levez, here, and then spike. So here I expect that Levez or low volatility zone refer to price action trading school classes. What is LVZ or Levez? It's low volatility zone. So this low volatility zone could drop down because this is also a good zone, but I don't know if this will break this low. If it doesn't break this low, we can go with previous high, placing our Fibonacci, and here within the zone it's 50 fib retracement. So here, if the price gets up to this zone, Levez 50, actually this is a weekly pivot point. You see, it's a pivot point, weekly pivot, so I think it could drop down. So that is what I see on sell side, and on buy side 29.80 is a possible buy trade, because in the history we had a lot of buying from that zone, a lot of buying. And here in near-term history, actually, you see a very strong candle. So this could have been also master candle here. So you see, head and shoulders here, rooftop here. So I think it could be sold there and bought from the lower zones. Australian dollar, it's ranging. 76.00 is a sell position, 76.40 is stop. Target 75, alternative buy 74.30, stop 74, same as previous week, guys. Everything has remained the same, but I really don't see anything new regarding Australian dollar, because Australian dollar is definitely in a ranging mode now. And yeah, this looks like it could be shorted, but it's effectively a range. So ranging from 76, and you see here, so this is now a range. So if you're short today, well, you need to pay attention to 74.45 and 75.25, because this was W breakout point here. So 75.45, 75.25, where you should take your profit for today, and this is a new possible sell from 76 zone, a new possible buy around 75 zone. Yes, Konstantin is saying Kalimera, mate. It means good evening in Greece. And tell all people to be aware of the Aussie and Kiwi during FOMC. Yes, Konstantinos, thank you. Definitely, guys, as Konstantinos and Ilya were saying, FOMC will be very dangerous for New Zealand and Australian dollar. It's normal, guys. It's normal. Those currencies are connected to dollar movement, and I personally don't advise you to risk anything during FOMC. But guys, please read my blog on Wednesday about Fed, so what you could actually look for after Fed meeting. I will also do an equity analysis in the blog. So FOMC is scheduled for Wednesday. So guys, if you took a sell trade, well, this is where you could actually close your trades in profit if you're short. But you know, you see it's like 640, so it's a bit of a slow moving market, okay? And also Japanese banks were on holiday, so well, that is what can also weaken the price momentum. And here is my blog for all of you who are new here. Go to admiralmarkets.com, go to analytics, then click on traders blog, and here. So this is where you can find Chris and mine blog. So that was it actually, what I was trying to explain. I won't make any positions until I see the touch of the zone here or there. So I am a little bit patient with Australian dollar. Dollar CAD I would buy at 30.80, 35.50, stop 32 target, sell around 32.30, 32.70, stop 31.00. I think the dollar CAD needs some sort of retracement. It is in uptrend, but definitely it needs some retracement. And I will, well, let me just pause the screen for a little bit. Here I will show you. Give me a second. Switching to other, wait, give me here. So Australian dollar, CAD, I actually need to show you something. Here I am already in a small sell trade because this is what I see here. So very small trade here. So as I say, this zone, guys, could reject the price. So if you want to take on short-term trading opportunities, this could be a zone for a sell, because very small risk trade, keeping the stops above this zone. So small risk trade possible here. But eventually for a bigger trade, you should definitely go for levels that I have posted here. So 32.30 is my next sell, where I would focus if my stop loss gets hit. So here I would go for this one. And I have a specific money management, as I've been teaching you. My first trade, usually what I make is like very small risk, sometimes even less than 0.5%. And then if my stop loss is hit, then it allows me to place an 1% risk trade. So for 2 losses, for example, I am like 1.50% only in a loss. Well, that is how I do it. So you see, 30 to 80 actually is my next selling spot, and that is what I'm giving you. This trade that I'm in, you can take it if you want, but I'm not sure that, well, if you want to take it, then go for it. And here, 32, actually 30 to 30 is where I would make another sell. Only buy position comes around 30.80. Here, guys, 30.80 is buy position. So I would like to see a drop and a possible buy here. Okay? So this is dollar CAD. Okay? Now, for another what I was trying to say, for another opportunity, we should also look dollar yen, but of course before Fed, of course. See, dollar yen, 101.30, 190, 102.00, and sell scalp swing possible 102.80. This means like 20 to 30 pips of a profit, scalp swing. Primož is saying, I think there is another risky moment, BOJ Wednesday morning. Yes, of course, Primož. I already, if you read, this is our summary here. I also made these guys for you. If you go to analytics, guys, and click fundamental analysis, this is also my article here. So you can also read what I think about this important event. So you see, and I specifically said BOJ monetary press conference on Wednesday, 21st of September. This policy provides the economic outlook and clues on the outcome of future votes. If it's more hawkish, we think it could be good for yen and vice versa. Regarding the conference, equities, especially Nikkei, Japanese 225, and yen pairs tend to be very volatile before or after the conference. So yes, this will be very, very risky. And I really don't think that before presidential elections in USA, they will go with a hike, but we will see. So yes, we want to definitely wait for FOMC. Now, dollar yen, guys, is, as I said, it's a bit rangy again, because see, everything is ranging. The market now is waiting for FOMC, and you see dollar yen is in a sort of uptrend. So what I would like to see is 101.30 zone for a buy trade. It's also something like 78, 88.6 if you go with previous swings. So yes, very close to 88.6. So I think this zone could reject the price. But also for a sell trade, 102.80. Somewhere around this zone. So this is like a range play. I will show you euro yen. Don't worry, be patient. So this is a ranging zone. So guys, those are our setups. Ilya is saying false chart. Which false chart, Ilya? I don't know. And euro yen, Adel, euro yen, Adel, Mario, okay. Yeah. I corrected the chart, of course. Yeah. So dollar yen, yes, it was like a range play. No problem. Now, okay, your questions, guys, now. Then I will roll the slides. So the first question is Euro Yen. Okay, Euro Yen, you see, it is looking bearish. This looks like M, but it's in fact, okay, for Euro Yen, if 4-hour close goes below this level, 113.50, this will be a sell probably. So if Euro Yen 4-hour candle closes below 113.50, I think this could be a sell. Until then, it could be sold on dips, but now it's a little bit in a sort of retracement. It's going up. So it needs to break this close below here and then it will drop. Australian dollar, New Zealand and gold. Sure. Australian dollar, New Zealand is at very important resistance point. I'm sure that we have a lot of confluence here. And actually I'm quite right. 50% of retracement H4 Fibonacci. We also have a descending trend line, EMA 89. So I think this could go down. If it breaks this H4, it will go up. Now this is where sellers are. Because here in near-term history, you can also see historical sellers. See this wick? It's like a shooting star. So here, another rejection is possible. So that is Australian dollar, New Zealand. Gold. Well, this looks really like a strong downtrend. And this is sold on rallies. So possible sell is here. This is the zone. It's a little bit bigger zone, but this is the zone where the price could reject again. Yes, this is the battle zone. And for possible long trades, it's clear that this is the region on gold for possible long trades. Shorts, longs. Euro New Zealand. Let's see Euro New Zealand. It looks bullish, but as you can see, it's sold on rallies. So I think that when we take a look at bigger picture, this could actually be sold on rallies. Yeah, there is a confluence spot. Here definitely, guys, I'm doing a quick analysis, so I'm trying to be as fast as I can because this is very quick analysis. 53.40 to 53.70 possible sell spot, and possible buy is actually exactly where the price was bought into here. Maybe a little bit more to the downside, like here, L4 and this. Sell, buy. This is Euro New Zealand. Now another question, New Zealand dollar. Okay, let's see New Zealand dollar. Yeah, everything is the same. This is like, this looks like a pennant, but actually it's a running pennant here. So this could be a range until this pennant breaks. If the pennant, this is running pennant, and it means forming pennant. So if this pennant breaks to the downside, we could see a sell-off. So for trend trading purposes, New Zealand dollar could be indeed sold if this pennant breaks. Emre is asking for GBP Australian dollar. possible buy zone. So from this spot, yeah, definitely this one now, L3 and here. But also, if it doesn't spike from this level, watch for L4. If it breaks down, it could go to L5. So yes, pound Australian dollar could spike from 72.7 to 72. It's a big zone, 72.60. So I would personally wait for 72.7. Let's call it 72.10 till 72.35. This is a minor pair, and this pair also has a big range, Emre, so you need to be careful when you're trading it. You need really to be careful. Okay? Now, Australian dollar, no, Euro GBP, then Australian dollar CAD. Euro GBP, you see Euro GBP, it's going up, so it will be bottom dips probably. Very clear for me, inverted head and shoulders, left head, right. Going long from a bottom of right shoulder was the best option. And here you see a retest, so this zone now is effectively a zone where if it retraces, it could go up. So if it hits this level and it manages to stay above H3, it will probably go more to the upside. So Euro GBP is a bit bullish now, and you can see N. This is N pattern, so this is bullish pattern. And Australian dollar CAD, a bit bullish here, ascending scallop in progress. It broke through this zone level here. It needs to close with 4 hour above this zone, and it looks like it will, even above H4. So this is long on dips. So if you go with Australian dollar CAD, zoom in to 1 hour 50 minutes and look for long trade opportunities. Okay? Now if you have any questions, guys, now I will roll the slides. So if you still have any questions, feel free to ask me. So this is euro dollar. This is pound dollar. This is Australian dollar. This is dollar CAD. And finally dollar yen. So I don't see any questions, guys. Pay attention to my next analysis. We had a good day today, euro dollar long. I see that you made money. I'm very glad. And on Wednesday, expect my Fed blog. And that is what I will be preparing specially for you, so you can read about the impact on Fed decision. Thank you guys for such a great presentation, and thank you guys for such a lovely day. Always glad to be with you, and I really enjoy when you ask questions, because that is what I really love to do. So thanks for everything, for comments, questions, and for saying that you are really enjoying these webinars. Thanks. I will talk to you soon, guys. Cheers. And as always, trade safe.